SpaceX aims to launch its long-awaited IPO in the second half of 2026. It will likely be the biggest IPO ever. We'll break down the latest reports, why now, and what to expect in the coming months. In IPO Radar news, Medline IPO Access, Freenome SPAC, and a notional IPO. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of Access IPOs. Late last week, we received the biggest possible news for SpaceX and Elon Musk enthusiasts. SpaceX aims to IPO in the second half of 2026. It's also the biggest possible news for IPO enthusiasts. It will likely be the largest IPO raise and possibly the largest market cap IPO ever. If you're a SpaceX fan or a Tesla investor, welcome to the show. I'll be covering this topic extensively between now and the SpaceX IPO date. Today and in future episodes, I'll talk about what to expect, timelines, possible Tesla shareholder IPO access and retail IPO access, and then ways to still invest pre-IPO. I've been monitoring this upcoming SpaceX IPO for several years on my website, and I update that page whenever there's any news about the progress toward the IPO. So there's an archive there of articles about how we got to this point. If you have any questions about this upcoming IPO, put them in the comment section below, and I'll either respond or use those questions for future episodes. I may even start a SpaceX IPO Watch segment on the show because there's going to be so much news surrounding this deal over the next 6 to 12 months. So how do we finally get to this point where SpaceX is going to move forward with its IPO? Going back to 2020, we started hearing news out of the company and from Elon himself that they were thinking about spinning off Starlink as a separate business coming out of SpaceX. This wasn't an immediate thing, but it was sort of a long-term thinking that Elon thought that Starlink would be a cash cow and that the launch business would be more of a drag, especially if they're trying to get to Mars. It's going to be very expensive. From his experience with Tesla in the public markets, he knew that it's challenging to have a not profitable company or a company that's burning a lot of cash in the public markets. It's just very hard with analysts and quarterly reporting. So he anticipated that Starlink would be this cash cow to be cash flow positive. And so those were the earliest mentions of this company becoming a public company. And of course, people wanted to invest in SpaceX all along, but it just wasn't a viable business for it to go public, at least in Elon's mind. Fast forward to 2021, somebody asked Elon about potentially investing in Starlink or SpaceX. And Elon said, this is from June 23rd, 2021 in a tweet, at least a few years before Starlink revenue is reasonably predictable. Going public sooner than that would be very painful. Will do my best to give long-term Tesla shareholders preference. I took note of this because people come to me to find out how they can invest in these companies. And when I see someone like Elon saying, I would like to give preference to Tesla shareholders, that's a message to me to go out and buy Tesla stock if you want to buy SpaceX stock eventually. That was more than 4 years ago now at this point. And for all this time, we've been operating under the assumption that Starlink would be a spin-off IPO at some point. Now, just last month, November 6, 2025, our ears perked up again because during the Tesla annual shareholders meeting, somebody asked Elon again about SpaceX and potentially investing. And I mentioned this and I read this quote back in November. I think it was episode 36. And he said this in a very calm and thoughtful way. He said in response to this question about investing in SpaceX, quote, I've been giving a lot of thought to how to give people access to SpaceX stocks because I do want supporters to have SpaceX stock. But there's this 2,500 shareholder threshold before you become a de facto public company. Maybe at some point, SpaceX should become a public company despite all the downsides of being public. A lot of people in the audience, their ears perked up. I think there might have been some cheering. Certainly people in the Twitter sphere, X sphere, were interested in talking about it. I mentioned it on my show in episode 36. That was certainly a change in tune from what he's been saying all along. He didn't really want this to be a public company. But people are sensing with AI and with the space race and with robotics, his three core businesses are sort of converging, the SpaceX, XAI, and Tesla. So all this was simmering after that annual shareholders meeting. And then late Friday afternoon, just last week, we got an article out of the Wall Street Journal. It said, SpaceX in talks for a share sale that would boost valuation to $800 billion. Company's CFO told investors about the transaction in recent days. sources say. This was December 5th. That was a big news story on its own because an $800 billion valuation is a double from the current valuation, or at least the previous valuation, which was $400 billion. It was considered the largest private company in the world, maybe second or third behind OpenAI, which had recently raised at a $500 billion valuation. We know Sam Altman and Elon are sort of rivals, and I doubt that played into this at all. But this talk about a tender offer at this $800 billion would sort of reset the valuation. And I think most people think that the demand for this company supports that valuation. $400 billion seemed pretty reasonable, but even at $800 billion, it's pretty reasonable when you start thinking about what this company plans to do in the next 2 decades. Not long after that article came out, we got a report out of the information in Katie Roof, who really had the biggest scoop, certainly in her career, but the biggest scoop in venture capital and IPO investing for the past several years. The article, SpaceX aims for a 2026 IPO after hitting $800 billion valuation. And why they wait until Friday to release these news stories, I don't know, because I'm always in a frenzy trying to update my material and tweet about it and all that. Not too long after this, Elon sort of denied this $800 billion fundraise, and I think he sort of read the Wall Street Journal article wrong. The Wall Street Journal clearly said this was a tender offer. They were going to bring in investors to liquidate some employees at the $800 billion valuation. Elon came out and said, we're not raising money at $800 billion valuation. This is false. So it was sort of a non-news story when he denied it that way, because they weren't saying it was a fundraise, it was a tender offer. But very notably, he did not deny the Katie Roof story at all. Sometimes he just replies and says false. He did that for the XAI fundraise with David Faber a few weeks ago, but he did not reply to this article on Twitter, which we knew was spot on anyways, because Katie Roof is spot on with her reporting. She's very reputable and she's broken a ton of stories. So I knew right away this was for real and this was going to happen. So these 2 news stories kick off this incredible frenzy that's going to be happening over the next 6 to 8 to 12 months, where we're all learning more about this SpaceX IPO, when it's going to happen, timing, all the details. And of course, it's not guaranteed to go through. A lot needs to happen. But I do get a sense with Elon's involvement with the government and the government's push to make IPOs great again. This was my focus on episode 36. I think that they're going to pave the way for Elon to do this and not give him too many headaches. There's going to be a lot of back and forth between putting out the filing and getting comments back from the SEC, but I think the SEC really wants this to happen, and they're not going to act like a speed bump, which naturally these IPO filings are speed bumps, but I think in this case they want to move this one forward to make IPOs great again. A couple days later, we got some follow-up reporting. Ed Ludlow, Eric Johnson at Bloomberg got a scoop that said SpaceX is to pursue a 2026 IPO raising far above $30 billion. It also said that the company is targeting a valuation of about $1.5 trillion for this IPO, $1.5 trillion, and is pursuing the listing as soon as mid to late 2026. SpaceX expects to use some of the money to develop space-based data centers, and we'll talk about that a little bit more in a second here. But the previous largest IPO in history was Saudi Aramco. It was a 2019 listing, and the deal raised $29 billion. So this Bloomberg story is saying 30 plus because I think they want to kind of say, hey, this is going to be the biggest IPO ever. That deal, Saudi Aramco, is valued at $1.7 trillion. So 1.5 billion market cap and 30 billion in raise, it would be one of the top 2 largest IPOs in history. Remember, the last couple of weeks we've been reporting about Anthropic and OpenAI potentially IPOing at a $500 billion to $1 trillion. I think OpenAI said $1 trillion, and raising about $60 billion. I think SpaceX could possibly raise 60, 70, maybe up to $100 billion in this raise. It's entirely possible with the demand for shares for this company, and you throw in some of these new technologies and new business ideas coming down the pipeline, not to mention retail enthusiasm. I think this thing could raise 50 to 100 billion very easily and be a $1.5 trillion or more IPO. I hope it's lower so that investors can get in a little bit closer to planet Earth. Reuters had a similar report on the same day, December 9th, said the company is looking to raise more than $25 billion with a valuation over $1 trillion. A source familiar with the matter told Reuters. SpaceX has started discussions with banks about the public listing. Of course they have if they're this far along, which could be around June or July, the person said. So 2 rounds of stories here, Friday and then the following Tuesday, and you can bet we're going to be getting all kinds of stories between now and the IPO date, which we don't know yet. Before we get into the details or the timeline of what to expect, let's talk a little bit about why now. Why 2026 is the time for SpaceX to finally go public. That Katie Roof story, the other big part of that was that this Starlink spinoff thing is not happening. They want to keep the business intact. And that's because the launch business has become a pretty strong part of the business, doing a lot of revenue on its own with government contracts. It's launching 90% of the world's payload right now. You have Starlink has 9,000 satellites. It's mature and it's doubling revenue every year. You can get Starlink all over the world. You can get Starlink on cruise ships and airplanes. Everybody wants to be able to use internet in those places, and Starlink is making it fast and affordable. And as Elon had said in those early tweets, he wanted cash flow to be stable and predictable before going public. And I think that's where he is. Right now, they're doubling revenue. It's just going to grow from here. The opportunity to disrupt the landline internet. I have Verizon in my backyard burying fiber. Do I want to be using fiber when SpaceX is going to be giving me satellite anytime soon here? I could probably do it now. But Starlink is also buying up spectrum in the US because they're building out satellite direct-to-phone technology. So another business line for Starlink is direct to your phone. Instead of using AT&T wireless, why not just use Starlink with your iPhone? So that is probably coming down the line. That's a massive market opportunity. Starlink could be one of the leading telecoms in the US. It still has its launch business globally for governments and private companies. And then the big topic, which has really hit its stride in the last 2 or 3 weeks, is this data centers in space. There's been videos of Alphabet's CEO out there talking about data centers in space. It makes a lot of sense from an energy and cooling perspective. Those are the two biggest costs of running a data center. Those costs would be drastically reduced if you can get the equipment up to space at a low enough cost, and that's where Starship comes in. Once Starship is launching payloads, then those data centers can be built out there. You also had Gavin Baker of Altretus Capital on the Invest with the Best podcast talking about why this makes a lot of sense. Elon replied to one of these videos with the Alphabet CEO just saying, "Oh, that's interesting," because he's now in the business of building hype for the SpaceX IPO. AI and data centers on this planet are really the two hottest possible topics and investments happening right now. If you put data centers in space, that automatically makes SpaceX a monopolist in launching this stuff into space. So incredible potential market opportunity. There's still a lot of technical challenges that need to happen before we have data centers in space, but it's coming in the next decade. Massive business opportunity. Now, as I said, Elon didn't deny this report of an IPO, and he didn't acknowledge it either until yesterday, and that's Wednesday. I'm recording this on Thursday. There was an article on Ars Technica by a guy named Eric Berger, who is a longtime Tesla, SpaceX, Elon author. He's been writing about this and following this stuff for a long time. Elon replied to his tweet about this article. If you read through the article, after years of resisting, SpaceX now plans to go public. Why? Makes some very good points. It talks about the space-based data centers. The first step is to modify the Starlink satellites to make those like little MIDI data centers, and then they'll be launching stuff up there. But they also want to build satellite manufacturers on the moon and use something called mass drivers to launch AI satellites without rockets. That would bring the cost down dramatically to be able to do this AI compute in space. So this has become this Starlink AI data center / AI network in space, plus a terrestrial telecommunications network that he's building here. Don't forget, they have this Mars mission, and to be able to colonize Mars and do what we want to do on Mars, they're going to need to send robots. Of course, Tesla makes Optimus. That's his robot product. And only Starship is powerful enough to get to Mars and deliver massive payloads that are going to be needed to create a sustainable colony on Mars. But all of this is in the context of it needs to happen now. Elon needs the capital to be able to compete in this AI world. So he has his XAI and he has his Tesla, but SpaceX, there's this incredible amount of value that just hasn't been unlocked. I mean, they just doubled the valuation over a tender offer. If they take this thing public at 1.5 trillion, who knows where the price is going to go. So this is an opportunity to unlock incredible value. And Elon is 54 years old. So if he's going to be working for the next 20 years to try to make this happen, he needs capital to compete in AI and to compete in the space race, even though he's going to have a pretty good monopoly on the space race. Jeff Bezos is also working on rockets and data centers in space, and there's several startups that are working on this challenge of making data centers in space and space stations out there. So there's this massive economic opportunity in space that's going to really expand once Starship can reliably take payloads up into the atmosphere and beyond. This Ars Technica article also talks about the substantial risks, which is if AI is a bubble, or if there's another financial crisis or pandemic, or if an asteroid is headed toward Earth. This is an urgent problem in his mind that we need to get to Mars and become multiplanetary. All this needs to happen in the next 20 to 30 years, considering his age. And to this point, he's been concerned about public investors scrutinizing his plan to colonize Mars, as that being really expensive. Those of us who have been following Elon know that he's a value creator, and you don't want to bet against Elon. So I have a feeling once SpaceX gets into the public markets, he's not going to care what Wall Street thinks. In fact, Elon still owns 42% of this company. So at a $1.5 trillion valuation, Elon's stake is going to be about $630 billion. He probably won't sell many shares. Let's hope he sells some, but he's going to maintain significant control of the company. He may even try to keep the voting shares because no one's going to complain about that. Everyone wants Elon in charge, and hopefully he stays out of politics. There's an article that came out of Bloomberg. SpaceX IPO at a $1.5 trillion would more than double Musk's fortune. If you don't like Elon for whatever reason, I know there's a lot of people out there who don't like Elon. He's got a lot of fans, but if you don't like Elon, buckle up because he's going to be the richest man in the world and his legacy is going to carry on for generations. There's no denying that. So you can either invest with him and go along for the ride or be angry about technology advancing. It's not something that's going to be stopped at this point. This is happening, and it's happening in the next 5, 10, 20 years. We're going to see some extraordinary technology and advances. Thankfully, with SpaceX going public and hopefully XAI going public, those companies will end up in our 401ks, in our index funds, and we can all participate without even necessarily buying the Tesla stocks and the SpaceX stocks outright. You can just buy it through your index fund. So everybody can participate in this extraordinary growth. So we applaud SpaceX for finally taking these steps. What are the next steps? Right now, we just have reports that this is going to happen. We have Elon not denying it. And so those are two really big steps. A second half 2026 IPO. I tend to think that's going to be a September to December timeframe. It does say it could happen as early as June and July. We know that Elon likes to do things fast. He's an action guy. He wants to get things done. So once he sets his mind to it, it's going to happen. So don't rule out a June or July IPO, but I tend to think that with the SEC and the government, they might slow things down a little bit. A couple of things to look for. First of all, they need to hire an underwriter. Big question is which companies are going to be the lead underwriters. Goldman Sachs, Morgan Stanley, JP Morgan, Citi, Bank of America, Wells Fargo. Of those, JP Morgan, Goldman Sachs, Morgan Stanley seem like the most likely. So a couple of these articles point out that they're talking to banks on Wall Street. The next big scoop is which bank are they going to hire. There's going to be teams of lawyers and teams of accountants and resellers on these shares, but the lead underwriter is the big one, and we should get some sort of leak telling us who it's going to be. But they won't be acting alone, and there may be joint book runners who lead the thing together, and that's probably the most likely scenario. We may also get a report about a confidential filing. Now, there used to be a limit on how large a company could be to qualify for confidential filing, but that rule was eliminated just this year. So now companies of any size can file confidentially for an IPO. The SEC will review that filing while it's still private and confidential, and they'll provide feedback to the issuer. The issuer will then incorporate the comments back into the document, send it back to the SEC, and every back and forth is going to take 3 weeks to a month or so. And that assumes that the government stays open, by the way. We still have that risk that the government could shut down again in January. So once that confidential filing comes out, and we may or may not hear that it's been filed, I have a sense that we will hear it. Just this is so big. From that point, it's usually 2 to 3 months at least for the filing then to become public. Now that has a lot of variables depending on how complicated the filing is. It's going to be very complicated if the SEC is working, if they want to get it out the door. My guess is they do want to get it out the door certainly before the midterm elections. And then 2 to 3 months later, they will release their S1 filing to the public. And that's when we get a first look at that SEC document. When that comes out, it'll be a big news story, and we'll get the financials. We'll learn about some of their business risks and how their business works, what they're planning to do in in the future. It's a treasure trove of information about the company, especially getting those financials. So once you get that publicly released filing, it's usually at least a month, often more, somewhere in the range of 4 to 7 weeks if all things go to plan. About 10 days, 9 or 10 days before the IPO date, they will update terms. That means they file an amended filing, essentially taking that original S1 filing and then filling in a lot of blanks. The most important blanks are going to be the number of shares they're going to offer, the initial IPO price range, some of the beneficial stakeholders who we know who they are. Alphabet has a big stake, Fidelity has a big stake, Elon has a big stake, but we'll get all that information disclosed. And then most importantly from our perspective, in that amended filing, or usually in that first publicly released filing, we may get some clues as to how retail investors are going to be able to play a part in this IPO. That could mean setting aside shares for long-term Tesla shareholders or any Tesla shareholders, and that filing might also share the allocation that will go to retail investors. Elon said in his tweets that he wants to prioritize retail investors, but you know there's going to be a lot of demand on the institutional side, so hopefully there's enough shares to go around for everyone. This is going to be a massive deal. Send 20, 30% of IPO shares to retail, or more specifically to Tesla shareholders. And there are mechanics in the S1 filing that allow that to happen. It's called a directed share program. So when that filing comes out, and again, we're talking several months down the line here, you want to look for a directed share program, and then that amended filing that would come out 10 days before the IPO date, that would have the details and how they're actually going to allocate shares potentially to specific people like Tesla shareholders, or could be even Starlink customers or something like that. So we do expect to see some pretty good retail access to this deal. And with so many shares being a part of this IPO, hopefully everybody gets a piece of the pie at that ground floor level. Hopefully the float is sufficient and they release a lot of shares to the public. And if a lot of shares are out there to the public, then that should give most of us, or anybody that wants to be part of this IPO, an opportunity to invest at the IPO price, hopefully. Also, when that S1 filing is amended, they start the IPO roadshow and market the IPO. There's really no marketing that needs to happen for this IPO. But when that S1 gets amended, then that's when we know the final IPO date. So we won't really know the SpaceX IPO date until 8 to 10 days before the IPO. The confidential filing will give us clues. The public release of the S1 filing will give us clues or a basic timeline, but the IPO date comes after the terms are set and the IPO roadshow begins. If you have any questions about the IPO process, let me know in the comments. Also, if you sign up for my free newsletter, there's a download you get for free. It's called From Startup to Public Company, the IPO Process, and that'll walk you through how things work in a one-page PDF, very simple to understand. SpaceX IPO 2026, I can't be more excited. It's the biggest possible news. It's going to be the biggest IPO ever. It's the company that most of you, my audience, wants to invest in. It's the company that all the Tesla shareholders want to invest in. It's really a dream come true for anybody who dreams of going to space or things happening in outer space. If you want to be a part of that future, aim to invest at the IPO price. You can learn how to do that on this channel over the next 6 to 12 months. So hit that subscribe button or follow button wherever you watch or subscribe or listen to the show. Let's move on to IPO Radar News. This is a segment where I report on progress of startups and mid to late stage companies that are on a road to an IPO but aren't quite there yet. But we get a lot of clues about these companies as they mature, as their revenue grows, and as they start to consider leaving the private markets and going into the public markets. And the first to talk about is Medline. Medline, let's not forget, is going to be the biggest IPO of 2025. The IPO date is December 17th. That's next Wednesday, this coming Wednesday. And it's expected to be about a $37 to $40 billion market cap deal. They want to raise about $5 to $6 billion, which doesn't sound very big after talking about SpaceX for the last 30 minutes, but it's still a very large IPO in its own right. They have priced this deal, at least initially, at $26 to $30 a share, and that is slightly lower than we were expecting. They were talking about doing this at a $50 billion market cap, and at the mid-range of this price range is about a $37 billion deal. It's coming out next week, and several brokers are offering IPO access to retail investors. In fact, almost all the brokers that I follow that offer IPO access are offering shares to customers. Now, we don't know how many shares anyone's going to get or what the allocations are going to be. So that's why a lot of people in our community have accounts at multiple brokerages and requested a lot of brokers. I've seen shares at Fidelity, Robinhood, SoFi, Webull, Moomoo, TradeStation, and E-Trade. And I'll be investing on multiple platforms. I like this deal. It's a long-term company. Its revenue has grown. If you look in the S1 filing, the revenue has grown 18% compound annual growth rate over the last 50 years. So incredible long-term growth story with a wide moat. Medline is in the medical manufacturing, equipment, and logistics business. Has a similar business to, say, a Cardinal Health or McKesson. And these are wide moat companies that deliver necessary products to hospitals, and there's no AI bubble in medical equipment. The hospitals are going to need gowns, and they're going to need syringes and masks and all the things you need to run a medical facility. So Medline, wide moat, solid company. A lot of investors are excited about this one. That doesn't mean the IPO is going to be successful. The deal still needs to price right. But there is, I think, lowered risk of this IPO with a company that is operated as this company does with a moat and IPOing into this bull market. Next up is a bit of a sad story about a company called Freenome. Freenome is an early cancer detection company developing blood-based screening tests. And I learned about this company because it was a very early holding in the ARK Venture Fund. That's Cathie Wood's venture investing fund that you can access through SoFi Invest right now. I invested that very early, and Freenome was one of those early companies, and it's very promising technology. The news that came out is that Freenome and Perceptive Capital Solutions Corporation have announced a business combination agreement to create a publicly listed company called Freenome. This is a SPAC merger, a special purpose acquisition corporation, also known as a reverse merger. Perceptive Capital Solutions, I don't know who they are. They're one of these companies that they IPO with the intent to merge with a private company, and it's sort of a backdoor way to become a publicly traded company without going through the hassle, it is a hassle, of an IPO. What we tend to find is that companies that SPAC versus an IPO are lower quality, and they're not very far along in their business maturity, and so they use the SPAC as a shortcut. With so many of these SPAC companies public already, they're pitching these private companies all the time. Now, there have been a handful of these SPACs that have been successful, SoFi being one of them, but there's been many more real duds. But a lot of the companies that SPACed in 2021 just haven't gone on to do a lot. Share prices have fallen in general. So these are generally frowned upon by the investor community. I don't like them because they're not IPOs. I don't think these companies are ready to go forward with their public offering, and that's why they choose the SPAC. But there's nothing I can do about it. I don't really care. I'd rather see these companies mature into a company that's ready to IPO and take that traditional path. The good news is that Freenome will become a publicly traded company, and we'll get it into our 401ks and index funds. And so I view that as a positive. I just fear that the stock is going to tumble when it goes public, or eventually tumble, because SPACs just don't have a good history of price appreciation. Just on Robinhood here, you can see that the Perceptive Capital Solutions Corp, or PCSC, stock symbol, jumped on this news because that's what these companies are trying to do. They're trying to find partners who are willing to go public with them. This is an IPO Radar company. I've written about it. I've followed it over the last few years. When I get a story like this, I mark it as exit. It's going to be an exit company, and I have a tag on my website, if you can find that, for different exit companies and companies who have either IPO'd or been acquired or SPAC. And so I add this to that list, and eventually I'll probably just remove it from the website, but I'll wait until it actually goes public to do that. So happy to see this as a public company, but maybe not as happy to have this in my index funds because I just don't have a lot of confidence in companies that choose this reverse merger versus the IPO. And this is a biotech, so it's a different type of investing. They're working on the technology for this cancer detection product. And a biotech is more about FDA approval and tests and all that. So there's an expertise to investing in that type of company, and that's not my expertise. So it's likely the last time I talk about this one, be moving it off the IPO radar list. Two quick stories. First one, Fervo Energy raises 462 million shares in the Series E to accelerate geothermal development. Fervo Energy, geothermal company, it's got big contracts with Google. It's building a massive power plant out there. It's become a bit of a darling in the venture capital climate companies. It's a clean way to produce a lot of energy to run data centers. We got an Axios report a few months ago, and I think I talked about it on the show. They were aiming to raise a Series E at $300 million. Turns out, now that it's been released here in December, this $462 million Series E tells us that there are a lot of people that want to invest in this company. We had also gotten a report earlier in this year from Axios that Fervo Energy was considering a 2026 IPO, maybe 2027. So it's definitely on our IPO radar as one that could go out. And considering it's this hot that it went from 300 million to 462, and their ability to raise that much money so fast means that this is a company with a lot of demand. And when there's demand for your company, that's a great time to IPO. So we'll be watching for Fervo Energy in 2026 or 2027. Last story is a company called Notion. Notion is a popular SaaS productivity software company that allows teams to build custom workflows and dashboards. And it's good for AI and email and collaboration, project management, calendars, to-do lists. It's a very popular productivity software package that I've actually tried it once or twice. I couldn't really figure it out. It was a little too complex for my little business. I use a productivity software called Asana, which is a public company. We don't hear a lot from this company, but this Bloomberg article said that Notion is said to weigh a tender offer at a $12 billion valuation. The deal is likely to raise about $200 million. So not only is it a tender offer, but it's looking to raise some money. This private company was most recently valued at $10 billion. Sequoia Index Ventures are part of it. What I found really interesting from this article, reading through it, it's not a very long article, but at the very bottom it says the San Francisco-based company could consider an initial public offering as early as the end of 2026, one of the people said. This Notion article says they might consider initial public offering as early as the end of 2026. When I'm putting together my upcoming IPOs list for 2026, I'll consider it, but I'm not sure there's enough evidence here to really say this one's likely to move forward. But the fact that they're talking about it and the fact that it's now a $12 billion company, these are very good signs that it's on a path to an IPO. Could always be an acquisition candidate. Of course, they're going to add some sort of AI piece to it, but SaaS is just not where venture capital wants to invest their money. And the public markets haven't been all that receptive to it either. We saw Navan go down in flames with its SaaS IPO recently, even though it was growing and profitable. So it's a tricky industry right now to invest in, but it doesn't mean we don't want to see this company move forward with its IPO. 2026 is looking like a great year to go public. SpaceX would be just a monster. It'll be incredibly exciting for the space economy, for Tesla shareholders, for Elon enthusiasts, and for IPO enthusiasts. So we'd love to see SpaceX go out. We'd love to see Notion go out. We just want to see more IPOs. Hopefully in 2026, the volume is going to increase like we're anticipating. But beware, market instability or stupid things that the government does can really crush the IPO pipeline. That happened twice in 2025 with the tariff announcement and then the government shutdown. So hopefully we can avoid that stuff and make IPOs great again in 2026. That's all for the show. Please subscribe to the YouTube channel, Spotify, or wherever you consume your information. Head to my website, accessipos.com, sign up for that free newsletter, and get that free download about the IPO process. And when you're ready, take a look at the Access Club. Just go to accessipos.com. There's a red star in the menu. The Access Club is where like-minded investors talk about upcoming deals and get bonus content from me. You can communicate directly with me in the Access Club. Go to patreon.com/accessipos or just go to the website accessipos.com. and you'll find a link on the homepage. That's all for this week. Quick programming note, I'm going to take a few weeks off here at some point. I thought I was going to start next week, but just with this crazy SpaceX IPO news and the Anthropic IPO news and OpenAI, it may push into next week. So I think I'm going to get an episode out next week. That would be December 20th. The following weeks, the 27th and January 3rd. I may take those weeks off, catch up on some of the work I got to do. I might work on the background here of my studio and spend extra time on my upcoming IPOs list for 2026. It's one of the biggest episodes of the year, so I want to make sure I get that right. So looking like I'll get an episode out next week, take a few weeks off, and then I'll be back on January 10th with my upcoming IPOs for 2026 episode. Thanks for listening. Thanks for watching, and I'll see you next time. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S-1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.